Here we go. It is Cowboy Metals live stream on July 11th, 2021. Hope everybody's doing well. Thank you for joining Cowboy Metals live stream, where we broadcast from the great state of Texas. Well, thank you for joining. Sorry, stream was playing in the background. There we go. We got that cleared up. So thanks everybody for joining. We'll give a couple minutes to let everybody load into the chat and to let YouTube know that we are now live streaming. Thanks everybody for joining. Welcome Cool Breeze, who's moderating for us today. We appreciate you doing that. Welcome to all the regular guests, Mark Mickelson, Jay Thompson, Kristen Rowe is here. Once in Exile is here as well. Thank you everybody for joining. Got people just loading into the live stream. We'll give it a few minutes. While we're waiting on everybody to get into the live stream, I want to bring you a message from one of the companies that we do support here on the channel. And that would be Go Gold Resources. So I'm going to expand this out to full screen. This shows the existing properties. One of those is purchased by Eagle Mines, and there's an option agreement on Los Ricos, which they're currently trying to develop. Parral right now is their producing mine, and we'll have a report on how much it's producing. So Go Gold is doing very well. They're generating a very large cash position from Parral and using that money to do some exploration on Los Ricos. They just recently had a news announcement on July 7th. That the company is pleased to report production for the quarter ending June 30th of 575,302 silver equivalent ounces, consisting of 315,632 silver, 3,170 gold ounces, and 120 tons of copper. Parral has generated positive free cash flow for 10 consecutive quarters, with estimated cash flows exceeding 5.5 million. So they're sitting on over $73 million US. They've got a lot of bank, which they're going to use, said Brad Linguil, President CEO. Parral's free cash flow when reinvested in Los Ricos is creating exceptional growth value for our shareholders. So they're using this 73 million to develop Los Ricos. Once again, these are their three properties, or two active properties here, Parral and Los Ricos. If you guys are interested in Go Gold, you can find them on the stock exchange, GDF on the OTCs, on the TSX GGD. All right, we're going to stop the share and go back to the live stream. Make sure everybody is in here. Thank you, Wide Winger, for being in. Looks like we have about 30 viewers, a little bit of a slow day today, but we'll go ahead and get started. I want to talk about the G20 and the global taxation scheme, because as we go along, we're seeing more and more pieces being put into place around the global reset. And the global reset is not a certain point in time. It is a series of activities that occur over time. Hey, Dumb Money Media, thanks for joining the live stream as well. Thanks to Dale Val, Nicolo Valeri, and everybody else. So the G20 is part of this global scheme. And in order to enact this global scheme, where those of my website subscribers will know, they have to set up a global taxation scheme, because the taxation scheme and the negative interest rates in the banking system are what is going to allow them to control the money aggregates. Because remember, what's going to happen with the fiat debt-based system is it's going to collapse. It's going to die. And what they're going to replace it with is central bank digital currencies. They're going to use two main controls to control how much money is in the system: taxation on an aggregate scale, and then individually the bank accounts as well, and the negative interest rates they can implement in the banking system. They can control those aggregates more directly with a push of a button, and they don't have to maintain all of this debt. And you lose the anonymity of having cash in order to do your transactions. So that's essentially what they need to do. So we're going to go into this announcement that they had regarding the global taxation scheme. It is a key piece of the global reset. So we want to talk about that here. And we're going to go over to this article. In CNBC, it says G20 financial leaders agreed to move forward on a plan for international tax crackdown. And they're calling it a crackdown. They always have to make it seem as though, oh, this should have happened in the past. This is a loophole. We just haven't done anything yet. We need to go chase this. No, it's a new scheme that they've come out with, but they're making it seem like, oh, we should have been doing this before, when it was never something that anybody had ever agreed to. So the headline is written to make you think like, oh yeah, they got to go get the tax evaders. Well, it's not tax evasion, it's global tax control. Each individual nation has its own sovereign mandate to set its own taxes. And what they're saying now is we want to circumvent that mandate or go above that mandate to create a global taxation scheme. But they're making it seem as though their people weren't paying their fair share of taxes. And of course, fair share of taxes is code for socialism. So it says here, financial leaders from the group of 20 largest economies said they have come to an agreement on how to move forward on a more stable and fair international tax architecture. Now, what does more stable and fair mean? There's been no precedence in human history for a global taxation schema that circumvents national laws and the will of the people of each nation. Why is this more stable and fair? Well, because again, remember, ladies and gentlemen, it allows them to control the aggregate money supply, because by taxing it, by raising taxes, they can remove the aggregate money supply and control that money supply better than they could otherwise. It says here, the group will aim for national leaders to approve the plan at the G20 summit in October. Financial leaders from a group of 20 large economies said they have come to an agreement on how to move forward on a more stable and fair international tax architecture. The group will aim for national leaders to approve the plan at the G20 summit. According to Reuters, the pact would establish a global minimum corporate tax of at least 15% in an attempt to prevent multinationals from shopping around for the lowest tax rate. The agreement would also shift the way companies like Amazon and Alphabet's Google are taxed, basing it partly on where they sell products and services instead of location of their headquarters. So what they're really doing here is they're getting rid of these offshore tax havens or tax favorable districts. They're putting in a scheme to place to tax corporates 15% everywhere. Why? Because the corporates make a lot of the money in society. They get all of the benefit from the consumers. That's a big chunk of money that it's easy to set up a framework to control how much they pay. It's much easier than it is to do on an individual basis and to monitor that and ensure compliance. It's easier to do it on the corporates. And remember, 72% of the economy is through consumer spending. So if they can tax the corporates, they can control the flow of money in society very easily. And they can ebb and flow it as they need to create whatever effect that they want. It says here, Reuters reported that German Finance Minister Olaf Scholz confirmed that all G20 economies were on board for the pact. Well, imagine that. There's no dissenters, nobody taking up for their individual places in society, individual people in society, and saying, maybe, our society doesn't want that. All of these leaders are creating a global taxation scheme. Why? So we can have the global financial reset. Why? So we can go into global MMT or global socialism. Why? Global control of the monetary supply. That's the end goal here. Meanwhile, U.S. Treasury Secretary Janet Yellen said a handful of smaller countries are still opposed to it, including low-tax countries such as Ireland and Hungary, but will be encouraged to sign up for October. So why would Ireland and Hungary not want to do it? Because they get advantages from having lower taxes. It helps boost their economy. And they don't get the benefits that the bigger nations get from the tax rates. So they're disadvantaged by this, and they don't want to play along with the scheme, but they're going to be made to play along with the scheme, because at the end of the day, that's what the global overlords want for the global reset. And you need to have a global taxation scheme, and you need to have global implementation of negative interest rates in the banking system and electronic money, which is a central bank digital currencies. This goes back to that IMF plan that was printed in 2015 that I've covered for my website subscribers, and also later, about a year later, for my video subscribers on YouTube in depth. Go back and look at my previous videos there where I go over that. All right, I'm gonna check on the chat and see how you guys are doing. Thank you everybody for joining. Remember, super chats are open. If you wanna ask me a question, pop a super chat in there and I will take a moment to answer that question in detail for you. Thank you, Tim Peters, for showing up. Chud Hunter, Ron Shuckleson, Richard Slusserol, and Kevin W. for joining the live stream. I appreciate everybody. Now we're up to about 150 people, and we got everybody on a Sunday afternoon. Of course, this is not only Cowboy Medals live stream, because we broadcast from the great state of Texas, but also the European and UK appreciation live stream. We do it earlier in the day every Sunday so that you guys can get access to us live and ask your questions. So thank you for all of our overseas subscribers. We appreciate you joining the channel and supporting us. Okay, going back to the stories for the day, I want to touch on not only the global taxation schema, but connect it to what's going on in inflation. We know that the dollar is going to die. We know that they're putting in the framework of the global reset for when the dollar dies and all the fiat currencies die: the yuan, the ruble, the yen, the pound, the euro, so on and so forth. So we're in a period of high inflation. I've been previewing this all year long, saying the commodities index got expensive. Then we looked at PPI and all of the producer indexes, and now we're starting to see higher prices now flow through the system to the end consumer. And I wanted to preview it by looking at the OECD data. So the OECD only has 3 prints for June so far. It has it has Korea and Mexico. You notice that Mexico is about 6%. Korea is down 2.4. Then you have Indonesia at about 1.3. I believe Indonesian's numbers, but there it is. But there's 2 higher ones that stick out. So you have Argentina, which has been going through a currency crisis now for about 2 years and have taken $50 billion loans from the IMF, which didn't solve it. They were throwing more bad money after good. And what happens in those agreements is IMF now gets control of Argentina through, if you don't pay it all back, we have control of your financial system and maybe your resources. Also, Turkey, which has gone through its own currency crisis in the last 2 years, is at 16.6%. So the lesson there, when you're going through a currency crisis, you have much higher inflation. That's a key characteristic. In the US, we're starting to get higher inflation, but here's a key takeaway from that. See, the United States has been going up. Last year, we're somewhere between 1.5 and 2%. And then this year in March, we spiked up to 2.6. Everybody said it's transitory. Then we went to 4.2 in April. Everybody said it's transitory. Now we're at 5.0 in May. And in a couple of days, we're going to get the June's numbers, and we fully expect it to be higher than 5. The thing that matters is the trend is up. Now, I put on Twitter, and I've been hearing from people I know that are in the market every day that they're seeing much higher than double-digit inflation in real prices. Will the government allow the CPI to print over 10% and print double digits? I don't know if they'll allow it yet, but I think here's what's going to happen. First of all, what's going to happen is that they're going to either lie about that CPI inflation number or tamp it down in some way. And it's going to become so blatantly apparent to all of the workers in the government that their own government's lying about it. You're going to start seeing leaks to social media. You're going to start seeing links to alternative media. There's going to be whistleblowers saying, hey, the CPI is higher. They're blatantly lying about it now. Because at the end of the day, as these systems age, it gets more expensive to basically pay people off and to develop systems to hide the truth. And eventually it starts getting out. And that's what's going to happen with the CPI. So we may not get an official double-digit print here in a couple of days for June 2021. But I think unofficially, people that work with those numbers are going to know, and it's going to start leaking. You're going to see this more and more reported in alternative media, and the CPI numbers are complete bunk. Of course, we think they have been anyway, but it's going to be the people that are actually running that system that start to whistleblow on it. I think that's what's happening. The other thing to note here that's of high interest is the fact that China's inflation rate has been going down. 2018, 2019, they were about 2.1 and then 2.9%, and then 2.7% in 2020, July of 2020. Then miraculously, their inflation rate has dropped. Why? Think about what China's been doing since 2020. They've been dumping bonds. They've been dumping US dollars. In other words, they're dumping the bonds and dollars back into the market, which is causing inflation elsewhere. Where? Turkey, Argentina, the US. In other words, the US has been able to export its inflation for so long, China being one of the main players there that got the bulk of it because of the current account and the trading balance. Now that China is dumping US dollars and assets, and Russia as well, they're pushing inflation back to US. Those dollars are starting to and that debt is starting to flow back to the US. And that's what's driving the higher inflation in the US, along with just the fact that we printed an untold amount, a ridiculous amount of money last year to deal with the quote unquote pandemic and the virus. All right, I'm going to go ahead and stop the share again. We're going to come back to the chat. Remember, guys, super chats are open. If you want me to answer your question, pop one up there. We have a super chat by Dumb Money Media. Why do all the central bankers look like the Shadow King from Legion? You know, it's funny when you look at physical characteristics of bankers, they do tend to have similar characteristics in terms of how they look, how they interact with the public, their overall attitude. And I think it comes from having to have the ability to blatantly lie and want to control these monetary systems without feeling bad about how you may be destroying the middle class in every country. And I think it takes a certain personality stereotype, and that's probably why it happens. Another question in from Mike Eaton and Q. Dr. Judy Shelton was and is Trump's head economic advisor since 2016. Have you seen her videos? Jack Kemp Shelton video on YouTube. This is a much bigger plan. Yeah, I have not been following Judy Shelton, but I've said it's part of a much bigger plan for as long as I can remember, as long as I've been writing. My book, Drop Shadow: The Truth About the Economy, is about 200 and some pages of telling you the bigger plan. And website subscribers and my subscribers will know that because they've had a copy of the book, or you can, order a copy on Amazon. I wrote it 12 years ago in 2009, published in 2010, and I talk about the bigger plan and I outline it with tons of data. And that is something that we do cover. What I am covering here on the live stream and on the YouTube channel is walking you through the various pieces to help you put together that puzzle. And what I want you to do is to continue to watch my videos, because if you watch the videos, I'm outlining piece by piece by piece what's happening, but I do give you the big picture. Now, if you're a website subscriber, then you're going to get the big picture. I'm going to print that out in the quarterlies. Oh, and by the way, a quick announcement for you guys. We're going to be moving away from the quarterlies after this last one in July to doing a weekly format. So hold off on subscribing on the website for now. We're going to revamp that and bring you more additional value. And when you come and subscribe, we'll do this starting in August. We're going to have some sort of weekly update for you where we talk about the big picture for those of you that want to support the channel on a subscription basis. Dumb Money Media comes back with yet another. He says, I've been playing around with a few videos this week. Looks like I may have to focus my attention on CBDC hit piece they're going to do, though, on WSS. I've heard about that hit piece, and I've heard there's a specific reporter who's going to do it. You know, whenever they come after you like that, it just means that they notice you and they're afraid of you. So I do think that that's actually a feather in the cap of Wall Street Silver. I've seen them address that on Twitter as in, hey, bring it on. And I've got no problem with it. You know, the mainstream media has lost all its credibility already, and it's going to continue to lose credibility when they do stuff like that. All right, guys, remember, super chats are open. If you have questions, we're going to jump back to the presentation, and we're going to talk about another subject near and dear to my heart. So we looked at this table of the inflation rates, 2 key points. We're starting to see inflation come back to the US because of what China and Russia are doing and dumping their US dollar reserves and their debt reserves. And you also see what happens. The rest of the world is having higher inflation, especially Turkey and Argentina, which are having currency problems. Now on to something a little bit different. We're going to talk about Basel III. So this has been, people have just been sending me this right and left over Twitter. So I told everybody I would address it today. That's the news story from Reuters reporting that Britain carves out an exemption for gold clearing banks from the Basel III rules. So I've done 6 videos now in this. I won't do a whole video on it. It's kind of pointless at this point. This doesn't change everything, but it does affect it. But we talked about Basel III, the NSFR, unallocated gold, what may happen to the LBMA market. I've been right down the middle with this and said, I don't think it's going to catastrophically change it right away, but I do think there's going to be a stair-step effect. And I do think that the gold market's eventually going to move away from London as the world center. And this news doesn't really change that. And I'm going to explain why. So Britain carves out an exemption for a portion of the gold trade, exempting it, saying it doesn't need to meet NSFR because it has to do with actual physical gold, which is, you know, a higher quality asset, and, you know, they can hedge it, and they don't need to back that with an additional 85% assets, that 85% haircut that was in Basel III. So it says here, banks clearing gold trades in London can apply for an exemption from tighter capital rules due on January 22nd, a British regulator said on Friday, removing what some said was a threat to functioning in the market. Now, notice here, the BIS rule, the Basel rules are all basically voluntary. And I said this a couple of videos ago on Basel III, a couple of Basel III videos ago. When you look at the text on the BIS website, it's not mandatory. So Britain can do whatever they want. And they previewed what they were doing here, which is, I think, was maybe on my 4th or 5th video, when they said, when the LBMA issued a release that said, we believe that the physical clearing trade part of it, as long as it involves physical, should be exempt from this. And I did not disagree with that, as long as it's the physical only. I'm not talking about derivatives, leases, any of that garbage. Physical. If it's physical, okay, settled and clear transactions, I don't have a problem. And I think that's what this press release is talking about. Now, whether they want to extend that beyond to some of the derivatives, I have a sneaking suspicion they do. They're not super clear in this article about that, but I don't disagree with just the physical piece of it. I do disagree with the leases and the other derivatives, the unallocated gold trade. All right, it says the upcoming rules, known as the net stable funding ratio, are part of Basel III regulations designed to make banks more stable and prevent a repeat of the financial crisis. The rules treat physically traded gold like any other commodity, requiring banks to hold more cash to match their gold exposure as a buffer against adverse price moves. In other words, the price hedging, which is what we've talked about on our program 6 times when we've gone over Basel III. The LBMA, an industry body, has lobbied against them, saying they're unnecessary, could force some banks, including clearing banks, to stop trading. Following a consultation, the Bank of England's PRA, Prudential Regulatory Authority, said on Friday it had decided to amend its approach to precious metals holdings related to deposit taking and clearing activities. Now, notice they're saying deposit taking, physical, and clearing, physical. Now, could they mean clearing also being the derivatives trade on top of that? Very clearly they could. The article here is not specific. So we'll have to see how this is actually implemented. and it won't come about until January 1, because that's when Britain was going to comply anyway. So any part of this that will be in compliance won't happen to January 1, and we'll have to see if they're being sly here and trying to exempt all of their unallocated gold trade or just the physical movement. And because we don't see the numbers from the LBMA on all of the derivative trades, I think that they could sneakily be trying to exempt the unallocated gold positions of these banks. But we'll have to see in January, because this article doesn't say for sure. Okay, the PRA said it had introduced the interdependent precious metals permission, which would reduce the size of the required capital buffer. Whatever the hell that means. What is a interdependent precious metal permission? Sounds like they're just making stuff up. All right, this is one of the key points that we've been asking for all these years, said Sakila Mirza, the LBMA's chief counsel. Clearing will be exempt. Now they just say clearing will be exempt. It says the PRA said it would not classify gold as a high quality liquid asset, which would have freed other trades as precious metals, loans, and leases. So they're not exempting precious metals, loans, and leases. So they are drawing a line here that says clearing, but does that clearing involve the derivative clearing or just the actual physical? I have a sneaking feeling they're trying to get all of that unallocated derivative OTC transactions. The LBMA says gold is liquid enough not to need additional liquidity buffer. I agree where it is physical, not a derivative, not an unallocated derivative. Anyway, the banks declined to comment. Of course, they're not going to comment. They're not going to open their mouth. They're going to let the LBMA do this through the mouthpiece Reuters. But anyway, I thought this was interesting. There is an exemption here. I think it's a partial. We don't know how much. We'll have to wait and see. I do think the big key here is this is Britain doing this for Britain. The rest of the world is going to look at this and say, screw you, London, you're full of garbage. We're going to start moving gold trade away from you. I do not think that this changes the fact that the gold trade is going to move away from London, the physical trade. I still think it's going to move. I think the BIS is going to organize that. I think countries like China and Russia and even some Western states are going to support it. We know the Middle East and Dubai will support it. I do think that this is a bifurcation of the gold market. It's no longer going to be dominated in London. They can pull whatever shenanigans they want. The rest of the world can move the trade wherever the hell they want. If the London PRA says we're going to exempt this, it doesn't give them a free pass. People can simply pull the damn gold out of there and go somewhere else, okay, if they don't like the rules. And I think that's going to happen. So again, my call on this about 3 or 4 Basel videos ago, where I said it's not going to cause an immediate release of the gold price to 10,000, what everybody wants, but it's also not going to make no difference. I was somewhere in the middle. I said it's going to take time, but I think the trade's going to move away from London. And I don't think this rule changes it. I think this rule is defensive on the part of London to say, basically, we know there's risk in the OTC and we're going to, use some language to kind of flower over that. But I think the next move is the rest of the world gold markets are going to start pulling their gold trade out of London and go elsewhere. We know because they're building the framework for it. We've seen that reported on my previous Basel videos. That doesn't change. So I don't think that this allows the bankers to quote unquote get away with it. I think you're seeing two sides here battle each other out for control of the market. And I think London is going to lose, because think about it. If the rest of the world wants to adhere to Basel and London doesn't, and people want something less legitimate and not a shadow gold market cornered by basically 4 big commercial banks, they're going to move to another market and screw how the LBMA and London implement Basel. It's not going to matter. So it doesn't stop that process, which I've been describing. It really just tells me that London is desperate at this point. And it's another nail in the coffin of London, I think, because this is only temporarily going to affect them, because the rest of gold trade is going to move anyway. The rest of the world's tired of their crap. They're tired of this, and they're going to move away from London. And London trying to be special and make special rules for themselves is only going to hasten the dissatisfaction with the London gold bull market, the OTC market, and cause people to leave it even faster. So expect to continue to see more war of words on this between the rest of the gold world and the LBMA. The LBMA will continue to isolate itself and will continue to lose credibility in the gold market. I think that's still going to continue. So I do not think that this is going to end that forever. All right, remember, super chats are open, guys. We've been talking about a lot of stuff. We've been talking about the reset and how you have to have a global taxation scheme. We've talked about inflation and what's happening with inflation and how we think that there's going to be a leak on the US CPI eventually, as the own employees of the US government realize the CPI is a complete lie. Because at this point, the formula almost can't be amended anymore unless they make it so blatant as that the people who actually believe in the system start revolting. And I think you're going to see a leak start to occur in the social media And we also talked about the Basel III rule changes and why all it's really going to do is isolate London, and it's not going to exempt them forever. And it's going to be that stair step I said, and it's going to be a movement away from London as the capital of the world gold market. That's still going to occur. It's going to give them some temporary shelter. And this is probably by design so that they don't crash the gold market right away. But I do think we're going to see a much bigger multipolar gold market and less of a dominated one by the LBMA and the COMEX. And I've always said that was true. All right, Dumb Money Media coming back with another contribution. Thank you, sir. Thanks, Rob, and your social media person for being the best. You're absolutely welcome. You have new videos coming. We appreciate you doing the meme videos. They're fun. The quality of what you do is really good. We like the videos you're using. We appreciate that, Dumb Money Media. And thank you for the $2 contribution as well with the awesome little graphic. All right, so I think we got a little bit more guys today. Now, I'm gonna get into something that's a wee bit sensitive. And I'm trying not to make anybody angry when I do this, but it's about gold storage and how shaky that scheme is and maybe how people don't really understand how it works, especially when you're trying to get your gold out this time. So I'm gonna talk real briefly about how to get your gold out from a very popular website and from somebody who's been a big proponent of gold and silver and whom we all love. But I got to tell the truth, because one of my guys has emailed me and he's like, man, I'm getting out of this. I don't trust these systems anymore. Now, before I go into it, I'm not criticizing this gold storage company. I don't think that they have been in any way not honest. But I do think that these costs of getting your gold out are not emphasized when people are buying it and don't realize it. And then when they get the bill, they're surprised. So here we go, for better or for worse. We're going to do it. We're going to get into it and talk about goldsilver.com, Mike Maloney's website. Now, I do have great respect for Mr. Maloney. I do not think anything untoward was being done. I don't think any lies were being held or given to their customers. I do think that we had a customer complaint and I wanted to explore it. And the reason I wanted to explore it was because I think the customer complaint's legitimate. I think gold silver is legitimate in the way they run their business. But I do think this is a warning for if you think you're going to put your gold into one of these accounts, especially like a pooled allocated account, and they're going to have to do something to get you the gold or silver when you request it, either minting it or sourcing a bar out of the pool account and shipping it to you is going to be cost. And that's what's happened here. So gold silver does have a storage program. Got no problem with it whatsoever. Again, no problem with gold silver, no problem with Mike Maloney. Love those guys. Love, love, love. But here you can store on their website, and they do have 100% allocated and segregated if you want. Before, I noticed they were selling more of a pool aggregated when it first came out, meaning because they said you can buy a bar and we'll give you a bar back, but it would be something different than what you got. Now they're actually offering that segregated too, which means you buy a bar and you get that bar back. So I just wanted to clarify that they've changed their service a little bit over the years to actually be a better form of ownership. And I actually think this could be a great form of ownership in terms of protecting your gold, in terms of having allocated, in terms of trusting them to store it, 100% on board. Love it, love it, love it. But I've got a follower who decided to go to Kinesis. He decided he wanted that debit card to get more quick access to his gold and silver and to be able to trade the tokens on Kinesis. Then he decided to liquidate his gold silver holding position and go to Kinesis. He'd been emailing me back and forth on this. I said, hey, whatever's best for you. They're all legitimate. I'm not telling you to do one way or another, not your financial advisor, but that's what you want to do. Okay. And I've been answering questions about, his questions about that process. Well, he got an email from Gold Silver about the cost. So we're going to share that email for you guys. Now I've redacted his name and his identity to be safe. And this is an email I printed, but I redacted, all this information. I don't want to say who it is. I'll just say it's GH. And he had it in Hard Assets Alliance and Gold Silver. And he's disillusioned about both hard assets and gold silver, but we're going to focus on gold silver. So one thing I told him was, I said, when you get it out of these storage places, you're going to pay a hefty fee to get it shipped and to get those bars out, especially in any sort of pool or unallocated account or anything in which it's not fully segregated. And even if it were fully segregated, you're still going to pay shipping costs. Well, here's his testimony. He says, Rob, now I know what you meant by how hard it was to move your bullion from one place to Kinesis or wherever you moved, meaning he could just have it delivered or moved somewhere else. I paid almost $2 an ounce for buying 1,000 ounces of silver, which is not that bad at the time that he bought it. That was about market rate. So I got no complaint there. And now here's the quote for them to deliver it to my door. Here's where it gets interesting. So it's a good lesson, he says, for me that buying and holding any physical is not as lucrative as it seems, especially if you have to pay another 10 to 20%. So listen to the cost he has to get this silver delivered to him. He says, I plan to now close all of my physical bullion holding companies, Hard Assets Alliance and Gold Silver, and move everything to Kinesis at this point. Why? Well, to him, he can get it through a debit card. He can do his debit card and get instant access to it wherever he needs to through the banking system. He likes that. And plus, he likes to be able to trade on their system from KAU to KAU, KAG, the gold and silver tokens into other currencies if he wants, and even the cryptos. Kinesis allows you to do that. So it's easier way to move money in and out of the financial system, in other words, than just storing it at a broker's house, which, that's the benefit of a Kinesis type system. He says, I just do not wish to spend for the sake of spending, but I think it would be good to let people be aware of what happens when it's time to get really get the physical out of these companies and get your own hands storage vaults. So he's given me permission to talk about this. And here's what Devin from goldsilver.com said in an email. Now, listen to the costs. Thank you for your InstaVault storage request. The conversion cost for shipping the total metal to your door for 10 of the 100-ounce silver bars, that's basically 1,000 ounces, which would be about $26,000, $27,000 of silver, is $2,773.82. It's more than 10% of the cost to get it delivered to his door. More than 10%. Those of you complaining that you're paying 5 to 8% premiums off of AppMex and all these other sites, it's costing more than that, over 10%, to get it from a gold storage company, a very popular and legitimate and great gold storage company, goldsilver.com. He said the price will be valid for 2 business days. If you accept the quote for conversion, we can charge a credit card and file for the difference. A confirmation, please respond back. So you're going to pay over 10% to get it from a very popular and legitimate company like Gold Silver. And again, I've got 0 complaints with Gold Silver and that team. But that's what happens when you store it somewhere and you don't have, like with Kinesis or GlintPay, that debit card access, right? And with Kinesis, the ability to trade it into various currencies and tokens and put it, out on the network. That's what happens. And that's the risk that you take. And again, I've got nothing bad to say about goldsilver.com. I'm sure they run 100% complete legitimate business. But this guy's complaining because it's like, that's 10% of my wealth that I stored with them. And it's a legitimate complaint. And are the costs legitimate? Probably. But that's one of the detriments to that system. When you actually want the physical, it's going to cost you, man. It's going to cost you a lot of money to do that. And that's just the way those systems work. I've got nothing against those systems. I just want you to be aware, because with all this stuff coming out with all these companies in these unallocated and pooled accounts, what's being lost is that even if you have an allocated and segregated, you're still going to pay a pretty penny. Now, does it mean you shouldn't store with all these companies? No. If that gives you peace of mind, go ahead. But it's going to cost you a pretty penny. And that's just the way it is. And I published this not in any way to take away from goldsilver.com and their mission. It's just to tell you what you're going to face, what one of my customers is facing, and to be aware of that so you have that information. Because GH, my subscriber, was not aware of that cost. He didn't know it was going to be so much. It wasn't printed right there on the website. I don't know if it's in the customer agreement or wherever. I haven't looked, but he wasn't aware, and he wasn't, too awful happy about that. So that's one of the reasons why Kinesis was a sponsor and GlintPay is a sponsor, because you have that debit card access. You have a way to get it very quickly, and the transaction costs there are very low compared to what this guy is going to pay to get it to his door. Dumb Money Media, I normally put a small amount of cash in one gold. Then when their redemption period is 60-day hits, I may redeem my metals. Kinesis is my fave now, though. Yeah, I kind of like Kinesis a little bit more and GlintPay a little bit more. That's why I brought them on as affiliates of the program, because they have those advantages of getting your gold and silver out cheaper. Now, it's through the banking system and through cash being able to buy goods, but at least you can get it without all those conversion fees. In any case. So people talking about quality gun safes and things in the chat about how to store it. Yeah, you can store it at home. You just gotta be careful. Don't advertise it. I want everybody to know, I don't store my gold and silver at home. I was a former real estate guy here in North Texas. I know somebody who runs a vault service. It's a private vault service. It's over there. I can get to it in about an hour. And I feel that's safer than putting it in my home. It allows me not to worry about a home invasion. But I'm okay if you want to store it in your home. Just be careful and don't tell anybody. I mean, literally do not tell anybody. Because if there's a crisis and this stuff hits the fan, they may come knocking on your door. And they may come knocking on the door with a shotgun because they're starving. And you don't want them to know, and you don't want them to redeem it. All right. That is just about going to do it for the program. Just to recap, we talked about Go Gold and the fact that they're sitting on $73 million of money. And if you are interested in Go Gold, you can trade them on the TSX under GGD and on the OTCQX GLGTF. We also talked about the G20 financial leaders putting in a global taxation scheme and why that's one of the pillars of becoming, getting rid of the debt-based fiat financial system and implementing the CBDCs. I've explained this in detail before. We talked about coming high inflation. We also talked about inflation is being exported now back from China and Russia to the US as they dump their US holdings. And that's one of the reasons why US CPI is raising. And I think eventually somebody is going to leak the quote unquote real inflation number at some point from the government, as I realize the entire system is a lie. And the cost of trying to keep that under hat becomes too exorbitant for the government to keep. And we talked about the Basel III exemption in Britain, which I think is probably not going to change everything with the way that the London gold market works. I do still think that people are going to pull their gold out of London and move to these other markets. And I think we're moving to more of a global market, which the BIS is going to rule over. I don't think this changes that. I do think it buys London a little bit more time, but it also is going to be heavily criticized by the other gold markets. And it's going to result in them pulling some of that gold off that market. It's going to de-emphasize London. So I don't think this gives them a get out of jail free card, like some people are saying on Twitter. Some of my friends are saying, "Oh, I told you the bankers," you know. No. London will be ostracized, just like I said. They may have bought themselves a wee bit more time, but in the grand scheme of things, hasn't changed anything. And then we talked about the cost of getting gold out of legitimate places where it's stored. You may pay 10% or more. So just be careful with those schemes. If that's okay with you, and that's a good trade-off for you to hold your gold and silver overseas safely, that's fine. All right, guys, make sure that you subscribe, hit that bell. Also subscribe on the website, goldsilverpros.com, under the free newsletter link to get notifications of our content. Thank you so much for joining Cowboy Metals live stream today, where we broadcast from the great state of Texas and we take no BS. And this is also the appreciation day, the appreciation broadcast for our overseas people that are in a later time zone, such as the Europe, the UK. Now we have some in the Middle East. Now we have some in Asia and Australia as well. Thank you guys for jumping on the program with us. Thank you everybody for the super chats, and thank you everybody for your support. Thank you, Michael and Cool Breeze, for showing up and doing the moderation for us. We definitely appreciate that. All of you have a wonderful rest of your Sunday. Stay tuned at the beginning of August when we talk about revamping our subscription system. And don't forget, August 19th and 20th, save the date. The second edition of the annual Money Metal Summit is coming. We've got some speakers lined up. We've got great content lined up. August 19th and 20th. It's going to be free for you guys to join. We're going to have great content. And we may even have a live spot local here in Dallas for those of you who said that you wanted to travel. We'll have a little bit of an after party and more coming up the upcoming conference. We will announce that here in the next week or two with a link where you can get your free ticket. Stay tuned to that on the channel. Appreciate you guys. Have a wonderful rest of Sunday. Until next time, this is Rob Keens with goldsilverpros.com.